David, I got to ask you about this because we've got trillions in money market funds. You've got investors itching to get into the bull market, it seems like. But we've also got a lot of uncertainty with the Fed, the election. So what do you make of Morgan Stanley's prediction?
Well, I agree with Morgan Stanley's prediction that when you're sitting at a time here where, all-time highs, I think we've had 34 or 35 here year to date, which is wonderful. And I vote that we go to 70. But here's the reality. What goes up ultimately comes down. And so, I think that we're expecting a pullback. I mean, if we look at July, historically, it is the largest number for growth of any month. And as we're looking at a presidential election year, it seems like we're following some momentum forward. But in that third quarter, I think that we can see a lot of headwinds coming as a lot of the data is changing right now. And, Powell and Yellen are out there giving testimony about some of that here today.
Okay, but David, listen to Powell because he's testifying today and you're talking about the risks and he's talking more about the risk of the economy slowing down. Listen.
Reducing policy restraint too late or too little could unduly weaken economic activity and employment.
That sounds to me like more interest rate cuts this year. And then I think the market rips if we get that, David.
Well, no question, Brian. If we get big cuts, market's going to rip. That's very inflationary. So, the Fed's walking a tightrope right now with, hey, do we cut rates? And then this goes really inflationary specifically for the market and maybe real estate as well. Or do we remain very restrictive? And then we see, unemployment rise too fast and we see things really deteriorate. I believe that we're at a place right now where policy is not necessarily influencing inflation, but rather inflation is influencing Fed's policy here today. And so my thesis comes down to the fact that this government spending that we're seeing is much higher than we've anticipated. Every 100 days we got a new $1 trillion. GDP is at 1.4 right now. This is a slowing economy, right? And I think that if we're talking about stagflation, I think that there's a great argument actually that could be made as we are continuing to trend towards ideas like this with 1.5 million full-time unemployed people here through the month of June. Those are the real numbers. And of course, overstated unemployment by 730,000 last year, according to Bloomberg. So, Brian, to your point, this is an interesting time. I'm not sure what the Fed's going to do with those rates, but my guess is that they're going to stay higher for longer.
You're scaring me a little, so I want to move to this because just when you think earnings season is over, it then starts again. We're going to kick off on Friday with some of the banks reporting. I'm wondering if there's a particular sector, David, that you're watching that you think is going to hit it out of the park that is has been an underperformer compared to what we've seen with the likes of technology.
Okay, well, as the banks are coming out right now, I think it's very important to understand the rate sensitivity that banks have and the fact that these higher rates right now have put them in a real jeopardy position. So big concerns about some of the reports the FDIC just brought out with 63 banks for sure going to be filing as insolvent. How many are sitting behind that number? My guess is it's a large figure. How about some areas that we think are going to surprise? I'm looking right now at healthcare, and I think that there's some nice plays in there. I'm a big fan of Dexcom. As I'm a type 1 diabetic and couldn't live my life without it. It's actually really changed things. There's a lot of people trending that direction as type 2s. I think that you're going to be seeing a little bit of change here. Maybe as it relates to gold and silver because of some of this new Russian tension and the Saudis coming out right now saying, hey, if you take away this $300 billion from Russia, we're going to start selling treasuries for the U.S. dollar. So, gold, silver purchases right now, those are going up. We've got a crisis here in supply. And so, we'll see what ends up happening. But oil's moving in the right direction here today as far as up goes, if you're an investor, not if you're trying to pay at the gas pump.
Yeah, David, great sectors to watch. But I just want to reemphasize a point that you made. Interest rates, that's key. And inflation is that runaway train influencing policy versus the other way around. I think that's really important to remember. Appreciate having you on.
Appreciate you. Thank you.